Financial topics, trending news, politics all come together here at the Vault.
We're coming to the end of 2021. What have you seen? Like, what are some of the themes of this past year that you'd like to enlighten us on?
I'd probably say the three to four major themes of 2021 that, have affected the markets, affected our lives. Obviously, number one is COVID and how, the government response to COVID, the fact that we were able to get vaccines out so quickly, great thing. It's kind of a marvel of scientific discovery to in some respects, that we were able to get a vaccine done that quickly. But then you got to think about the other side of it, how vaccination rates aren't as high as we'd like, how there's this fight going on, this push and pull between what I think is right for individual liberty versus what the science is. I've had plenty of conversations with people this past year about, just how they're currently feeling in this environment. And, to say the least, some are optimistic, but there's a lot of people that are upset, and rightfully so. This country was built on individual liberty. And, at the end of the day, I can understand and fathom how certain people could react the way they are in this sort of environment. However, I still think it's important for us to be cognizant and mindful that we aren't the only people in the world, right? Like we can't continue to assume that America is the only place that matters and people in general just don't matter. So hopefully 2022 will be a little bit different. Maybe people can get out of their cubby holes a little bit and start to really love on each other again. But that's going to be tough when we can't really touch each other. You know what I mean? And we're scared to do that. So, hopefully that phobia we can get over within the next year or so. But long story short, I'm still very, very optimistic about what the prospects look like for next year and the year after, because human nature doesn't stop. The stock market is kind of a snapshot of human activity. And as long as human activity doesn't stop, we're always going to continue to have a market. Even though people are feeling dire and stressed and not knowing whether or not they want to be invested or not, I would caution you and say, think about what we were saying 10 years ago, right? And then think about all the progress that we've made since then. So, I understand how you feel, but that's just in the moment. Right. Let's think about what is going to happen 3, 5, 10 years from now. And let's make sure that we're properly positioned to take advantage of it. So that's all I kind of hope for. Now, another theme of 2021 is obviously the first one was COVID. 2 was, I'd have to say, government intervention. Yeah, what I mean by that is obviously the Federal Reserve. The Federal Reserve is just continuing to pump and pump and pump and pump. And that's a big reason why cryptocurrencies are taking off. That's the biggest reason why we had probably the biggest IPO year we've ever had. There's more money sloshing around, M1 and M2, right? There's more money sloshing around than we've ever had in the marketplace today. And that's going to dry up. And there's going to be some people who get caught on the wrong side of that. So over the next year, 2, 3 years, if you aren't an active manager and you aren't actively seeking companies that are growing their earnings and growing dividends, you might be in for a rude awakening. Yeah. Because there's a lot of euphoria around a lot of these names that people are heavily invested in. You got the meme regime, as I like to call them. These people who are just invested in meme stocks and just basically pumping and dumping stocks all day. And then you have other individuals who are literally just trying to find sound opportunities to place cash because you can't get any yield on your money, right? The aggregate says cash over the last 10 years has been a bad investment, right? So I would caution, and I'd say my last and third theme, besides the Federal Reserve, is obviously going to be interest rates, right? So we've been in a low interest rate environment now for about a good 20 to 25 years. And over the past decade, if you go back and you look at the 10-year treasury, it's actually come up quite a bit. And it's been slow, right? But once again, we'll take a look at it in a little bit, but in the aggregate, if you see that chart is on a direct line going higher. How much higher? Who knows, right? That's going to be a give and take based off what happens in our society, how well we reopen, whether or not we reopen, right? So there's just so much uncertainty right now with regards to the market, but markets seem to be shrugging it off pretty darn well. People don't really care about valuations, but the only reason why they don't care about valuations is, again, because of what the Federal Reserve is doing. So if the Federal Reserve wasn't continuing to increase their balance sheet by $1 trillion per year, right? Well, then you wouldn't see as many people investing in stocks right now. They'd be finding other alternatives.
Interesting.
Yeah.